In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Tencent has suffered its worst first profit drop in over a decade as the Chinese government cracks down on new game releases. Can the tech giant recover? Plus, crypto volatility continues, but so do the opportunities for investors hoping to buy in. We'll break down the short and long-term outlook. And Goldman Sachs confirms it is now advising Tesla as it looks to go private, though the bank wasn't on board when Musk tweeted as much earlier this week. But could U.S. national security officials block the go private plan anyway? First, to our top story, it looks like Facebook has some company when it comes to disappointing tech earnings. This time, the results are out of China, where Tencent posted its first profit drop in at least a decade. Shares plunged as much as 10% on the news. The Chinese social media giant has now lost more than $160 billion in market value since January. And remember, Monday, Chinese regulators forced Tencent to halt distribution of a popular video game and has frozen approval of game licenses amid a government shakeup. Despite that, gaming and its popular WeChat app are still going strong. To discuss, we've got Ben Harburg, managing partner of MSA Capital, and in studio we have Bloomberg Tech's Selena Wang. Ben, you operate a venture capital fund based in Beijing, and you've invested over $1 billion in Chinese companies over the last 3 years. How concerning are the revenue and profit issues here for a company that has been going strong for a decade?
Listen, in the gaming space in China, we've seen substantial amounts of government involvement around regulation. Consumer protection has obviously been a theme over the last few weeks when we've had faulty vaccines, peer-to-peer lending issues. So, it's not too surprising to see them have struggles with some of the games coming out the gate. And I think that in the long term, those can be corrected. For the sake of Tencent, though, I think some of their bigger issues lie with the losses that they've seen in total share of user time. So other competitors like Toutiao cropping in, taking up to 10% of what used to be a market dominated by Tencent in that space.
Toutiao, which is sort of like China's version of YouTube, Selena. Mobile gaming revenue declined 19%. How much of this is the result of bigger issues at play, whether it's trade tensions or, the Chinese government crackdown?
The largest cause of this substantial drop is really domestic regulatory processes and problems. So there is this bureaucratic shakeup happening in the government right now. And because of that, there's been sort of this power vacuum. And amid that, none of these bureaucrats want to stand out and accidentally make a change that could severely hurt the government's broader censorship policy. And so because of that, these licenses have been halted for several months. For a long time, Tencent was seen as this unshakable social media giant. But what people forget is at its core, it's a gaming company, and they make a very significant portion of their profits, of their revenue from gaming. And because of this, they can't cash out on some of their biggest blockbuster games, like Fortnite. And the fact that one of their biggest blockbuster games was forced to be recalled shortly after it was announced shows that they are not immune to the issues of the Chinese government. And that's why we're seeing this reaction.
And, it's ironic given that the Chinese government also has helped these Chinese tech giants flourish, in part by blocking U.S. technology companies from operating in the country. Ben, do you have any insight into why regulators are now cracking down on these games in particular, and if there's any end in sight?
China's been suffering from an epidemic of gaming addiction. Some estimates put it at 23 million individuals in China suffering from addiction here. So consumer protection has come to the forefront of the Chinese government's agenda. And I think that they're going to continue to look at different modes, different platforms, Toutiao as well hit by this, that are responsible for grabbing users, extreme amounts of users' time, and then also obviously sucking their bank accounts dry through in-game purchases. So I think that this will continue to be a trend for the foreseeable future, particularly in gaming.
Selena, talk to us a little bit about the competition. We mentioned Toutiao. Where else are users spending their time?
So in terms of the gaming landscape, they have a lot of competitors there, but this regulatory crackdown is affecting industry-wide. So we're going to see players like NetEase also be impacted by this. In terms of engagement, WeChat, Tencent is facing some of the similar problems that Facebook is. It's becoming so large and dominant that they're starting to reach saturation, so the growth rate is starting to slow. Toutiao is this news aggregation app that Tencent certainly has their eyes on. They have very strong artificial intelligence that's able to draw in users and keep them into their ecosystems. There are also a slew of other video sharing apps that are also gaining a lot of traction in China. That being said, Tencent still is the dominant place where Chinese internet users spend their times. They have this mini programs apps that's going to also be a way to draw in users. Users will be able to bypass actually the traditional app stores and just directly use services within WeChat. So they have a lot of things at work that are trying to keep people within their ecosystem. But that being said, they do have a lot of competitors.
Ben, what's your short and long-term outlook here?
I think in the short term, they're going to struggle. I don't see any light at the immediate end of the tunnel for some of these games, particularly, PUBG looks like it could get stuck in the regulatory approval process up until even next year. And so I think that their main revenue driver, gaming, is going to be hit. But in the long term, I do think there are plenty of potential for them to continue to expand what they do. They need to continue to squeeze the juice out of WeChat through improving their payment mechanisms, mini apps, mini games, looking to add additional services as they have with identification, biometrics, things like that, and then expanding as well along to new revenue streams. Obviously, we saw that things like cloud computing and payments surge for them in this quarter, 81%. Their monthly active users on payments is 800 million. So, they have an ingrained advantage over someone like Alipay because you're already in their app, buying things, socializing with your friends, and so it makes it quite easy to use things like payments, but they're going to have to expand those offerings and cope with some of the new regulations by the Chinese government that increase the reserve rates that each company has to have in the central bank.
Selena, meantime, Tencent has invested $93 billion in hundreds of other companies, including Snap and Tesla. Are there any upsides from some of these investments that Tencent will be benefiting from?
They actually blame some of their profit declines on fewer investment games that actually cashed out of startups like LMA and Mobike in order to bankroll some of their other investments and other services. Their Snapchat investment, we still have yet to see, but so far they haven't done so well this year. Tesla, there's a lot of questions about where that stock is going to go. People also forget that Tencent has a U.S. investments arm that's very strategic. They have here in the Bay Area, and they look at a lot of very early stage startups. And when I've been looking at the data, they've still been relatively active. They haven't come into any CFIUS issues in terms of those areas. And those are really focused on very early stage frontier tech investments. And we have yet to see how those will play out.
Okay, Selena, hang on, because I also want to talk to you about Twitter. Ben Harburg of MSA Capital. Meantime, thanks so much for joining us today from Beijing. Now to Twitter. After being harshly criticized for not banning conspiracy theorist Alex Jones and his InfoWars show, Twitter is now taking temporary action. Originally, Twitter CEO Jack Dorsey said Jones hadn't violated Twitter's rules, but a new video posted by Jones apparently has. Dorsey told NBC News that Jones's suspension is designed to change behavior. Take a listen.
Any suspension, whether it be a permanent one or a temporary one, makes someone think about their actions and their behaviors. And
you think Alex Jones is going to change his behavior based on a timeout?
I don't know. We have found that it does have the potential to impact and change behavior.
Twitter is limiting his account access, and Jones won't be able to publicly interact with users for a week, but he will be able to browse the platform. So, Selena, walk us through the step-by-step here. What rule did he violate, and why does he still have any access at all?
Twitter hasn't been very clear on what in particular it was that he violated, but he did post a link to a video that seemed to directly incite violence and actually against the media. And now Twitter is sort of doing this big 360 reversal after last week when it said that Alex Jones hasn't violated any of our policies yet. We will take action when, in fact, he does. And so the team has decided that now he has taken action. Now, as you heard from that short clip with Lester Holt, Jack seemed to say that he's in this temporary timeout. And the the hope is that these types of things will convince people to change their behavior. And there's actually been an outpouring of tweets right after that interview clip came out of people saying there's no way Alex Jones is going to change his behavior as a result of this 7-day ban, which in fact isn't a true ban. He's still able to access and search tweets and send direct messages. So I think at this point, we're going to have to see what sort of company Twitter wants to be in the future. It's been very clear about wanting to have rules, and it wants to stick to them and not make one-off decisions. But the bigger question is, are they sacrificing values and ethics and potentially common sense, some people argue, by sticking to these rules so stringent?
I'm looking at Jack right now responding to folks on Twitter saying this very thing, that if anyone's not going to change their behavior, it is Alex Jones. And Jack is sort of elaborating on his belief that a timeout works for some users, though, certainly not all. Do you think that Twitter and Jack Dorsey have some sort of broader strategy here, or are they just putting out fires as they arise?
Some of the sources I've talked to who are current employees, former employees, are very upset at the direction that this has gone, and they feel that this decision is really a solo Jack decision, even though a lot of people have disagreed with it. In fact,
but why? What's the motivation?
The motivation, I have asked Jack himself. He hasn't responded to me, but the critics would argue that he doesn't want to alienate right-wing conservatives. He doesn't want to lose all of Alex Jones' followers and users, and he wants to maintain this neutral platform. And that is sort of the very pessimistic view of why Jack is doing this. On the optimistic view, it's that they're really trying to come up with a thoughtful, broad policy strategy that they can apply across the board and not simply just follow on the heels of what their larger competitors are doing, and really come up with their own succinct strategy.
All right, Selena Wang, Bloomberg Tech, let us know if Jack responds to you. Thanks so much. Coming up, Bitcoin and other cryptos have been under some selling pressure this year, but the number of products in the space for investors continues to grow. Is demand there, or are buyers too skittish? We will discuss. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The biggest producer of cryptocurrency mining chips is planning a Hong Kong IPO to raise as much as $3 billion. Bitmain, led by millennial tycoon Jihan Wu, closed a private funding round in the last few weeks, valuing the company at about $15 billion. A successful listing would be a landmark event for the crypto industry, which is increasingly trying to move from the fringes of finance and into the mainstream. If the IPO proceeds as planned, it would be a major test of investor appetite for digital currency companies after the market value of Bitcoin and its peers has tumbled by more than 75% since early January. So where does the industry go from here? For more, we're joined by Hunter Horsley, CEO of Bitwise Asset Management, which just launched 3 new crypto index funds. Also with us, we have Spencer Bogart, partner at Blockchain Capital and a member of the advisory board at Bitwise. So we've seen a huge tumble, across all cryptocurrencies, a bit of a spike today. Yeah. What is going on?
Yeah. So today, last I checked, the large caps are up around 10%. The mid caps are up even more than that. It's been really interesting with the mid cap index to see how the mid caps move, which I think was hard to have visibility into previously. So I think prior to this week, we saw a huge drawdown, and I think that was an overreaction to the sort of procedural extension of the Van Eck ETF filing and the outright rejection of the Winklevoss filing. And today the market's rebounding. I think potentially investors and traders think that the market corrected too far.
The SEC, Spencer, still doesn't seem comfortable with these ETFs and continues to reject them. What's your short and long-term outlook on the volatility?
Sure. As far as the SEC goes, I think they're running out of reasons to disapprove some of these things. So some of the surveillance sharing type arguments and underlying surveillance of these crypto spot markets is going away because some of the biggest exchanges like Gemini and Coinbase have set up surveillance sharing type things that should appease the SEC. And meanwhile, we're seeing many products listed overseas. So I think they're running out of reasons. I don't think volatility is really the core of it. At the end of the day, all early stage tech is volatile. When Facebook reported earnings a few weeks ago, there was $120 billion of value erased in after-hours trading alone. All of Bitcoin today is only worth $113 billion, right? So if it went to $0 today, it would be smaller losses than what Facebook did in after hours.
But a lot of people would lose a lot of money.
True, absolutely.
So, Hunter, talk to us about what you launched today, these additional indexes and what that means.
Yeah, absolutely. So last year, Bitwise introduced the first cryptocurrency index fund. We're the leaders in indexing in crypto. And today we launched 3 new indexes. So we have the Bitwise 10, a large cap index, but we also introduced a mid cap index, the Bitwise 20, a small cap index, the Bitwise 70, and a total market index. We announced an advisory board, which includes Spencer, who's the head of research and partner at Blockchain Capital, which is a leading venture firm, Matt Haugen, our global head of research, who was previously the CEO of ETF.com, and Shrikant Dash, who was the global head of research for S&P indices, sat on the S&P 500 index committee for almost a decade, and then led indexes at Bloomberg.
What's demand been like?
Yeah, so over the last few months, this is a great question. Over the last few months, we raised a few $1 million a month. I think what we've seen this month will be larger than last month. I think what we've seen is that there's a huge amount of interest, and a lot of people are wondering on the timing. They don't want to catch a falling knife. They know that they want to do something, but they don't know when. We talk with the largest institutions that you'd imagine, the large consultants, endowments, pensions. All of them are interested. We did a webinar recently with 500 advisors, and 75% said they would consider an allocation of crypto. 80% said their clients were asking about crypto. So I think the interest is there, and the question for people is getting comfortable with what their thesis is going to be. That was the top issue mentioned in that webinar, and then what timing makes sense for them. So there's not a sense that there's a rush right now. Do they want to come in now with the idea that prices are low? Do they want to wait and see how things play out if they get lower, or wait until there's more consensus internally? So that's what we hear.
Spencer, the co-founder of Ethereum, said he thinks that trader types are driving the volatility that we are currently seeing, but that the burgeoning ecosystem is actually getting stronger. Would you agree with that assessment?
Undoubtedly. I mean, certainly the trajectory is very clear. I mean, the industry continues to gain more developers. There's more institutional support, whether it's firms like Goldman Sachs announcing that they will be rolling out a trading desk related to crypto. In general, I mean, custody providers coming online, the trajectory is very, very obvious. But what we see is market cycles where things tend to go up faster than they should expect, than they should, and they go down faster than they should, right? And the same thing happens particularly in these markets because they're so retail dominated, right? This is one of the first markets that we've seen, a financial market where retail investors were first before institutional investors, right? Which means in general, if retail investors are a little bit more emotional than large institutional investors, we go higher on the highs and lower on the lows.
At the same time, I recently spoke with the CEO of Coinbase who said mass adoption is a long time coming, especially given the fact that there are still regulatory issues in the United States, but also around the world, in Europe and other countries, there's no regulation at all. So mass adoption, how far out?
Yeah, I think that there are old regulations that still apply, and people are figuring out if there are adjustments that need to be made there. But in terms of the time for mass adoption, I think that's a really relevant point, and I don't think that Brian's wrong about that. I think it'll take time. Whether that's a year, 5 years, 10 years, it's hard to say. But I think it's safe to expect, in the same way that the internet has been deployed and really valuable applications were introduced in the 2000s, after 2010, Uber was created after 2010. We would expect that the application and deployment of public blockchains and crypto assets will take some time. I think, like Spencer said, we continue to see really positive signs in terms of the number of wallets being created. I think Coinbase is over 20 million accounts. Blockchain, which is another popular wallet provider, is over 25 million in terms of the number of transactions, the number of active wallets. And so those are really positive signs, but it will take years.
Spencer, what do you think then the biggest risks? Obviously, you're both optimistic about the future of crypto, but what do you think the biggest risks and hurdles are?
I don't see actually massive risks. I think the overall time is the biggest tailwind here. So I think that over time, dealing with these crypto assets and these open financial networks is very, very difficult. It took a long time for people to adopt open information networks like the internet. It'll take at least as long for people to adopt open financial networks in crypto assets. And as such, I think it's going to be reserved, most of this market will be reserved for startup disruptors. Large incumbents like BlackRock are still saying that 0% of their clients are asking about crypto. And meanwhile, we have Hunter here saying that on a recent webinar with 500 RIAs, that 80% said they've been asked about crypto, right? So I think that this is a market that's emerging outside of the core of the legacy financial industry, but it's headed directly towards it.
All right, Spencer Bogart, Blockchain Capital, Hunter Horsley, CEO of Bitwise. Thank you both.
Absolutely.
I know we'll have you back to continue this debate. Coming up, how an NBA champion wants to build a winning team for his tech investments. We will hear from Golden State Warriors superstar Andre Iguodala. This is Bloomberg. Andre Iguodala may have 3 NBA titles to his name, but he's also got a host of hot tech investments, including Limebike and the footwear company Allbirds. The Golden State Warriors star is one of the growing number of sports superstars making a name in the world of venture capital, and says it is in fact a lot like building a championship basketball team. I spoke exclusively with Iguodala on the sidelines of the Bloomberg Players Technology Summit here in San Francisco.
To invest in people, to invest in an entrepreneur. Jeff Jordan, Andreessen Horowitz, he's taken me under his wing, taken my team under his wing. He's helped us tremendously, and he always says invest in the entrepreneur. It's not always the company, and I've been on both sides of that, and investing in an entrepreneur is definitely the way to go. People that are genuine, people that have a passion, people that really want to work hard, and they have the credentials, and those are the ones that most likely will help you see through your investment.
What are some parallels you found on the court and investing off the court?
Well, it's similar to being a general manager, actually, and I have a really good relationship with our GM, Bob Myers. We have a really good relationship, and we speak a lot about, putting the right personalities together, putting the right coach in place. It's basically you putting the team together to win a championship, and it's similar when investing. And being a VC, you got the right entrepreneur, you're putting the right CMO behind them, you're putting the right CFO there, you're getting the right marketing team in place, you're making the right hires, you're going out and you're seeking the best recruits to come in and help your business grow as best possible.
So talk to us a little bit about what your portfolio looks like and where you've had success.
So I've been investing in a lot of different companies, whether it be consumer products or such as Harper Wild or Madison Reed, but at the same time, sports-related, esports, TSM was my last investment. Lime Scooters, another product, has made a lot of headlines recently, and some things that are close to me, Thrive Global with Ariana Huffington, and that's a wellness space and a wellness platform, and I've dealt with sleep deprivation and doing yoga, meditating, changed my entire diet. So that's something that's close to home that I can preach about, all day to, not just those in the sports world, but normal walks of life.
Have you had any exits so far? Have you made any money?
I actually haven't had any exits, but I've had some companies who are killing it. I had some companies who I passed on, and I regretted it, and I just got in the last round, and that's GOAT, the shoe marketplace. It's the largest shoe marketplace platform, and I actually passed on it because I was like just my introductory meeting, and that was like the first meeting I took, and I kind of didn't quite know what to do with it, but it was a great learning experience, and luckily I was able to get in on the last round.
That was Golden State Warriors player and tech investor Andre Iguodala. We're going to have more of that exclusive chat later this hour. Coming up, the roadblocks are piling up as Tesla CEO Elon Musk tries to take the company private. We'll talk about who's on board and what U.S. national security officials may want to know about it. Plus, we speak with Dropbox CEO Drew Houston on running a public company and the recent departure of COO Dennis Woodside. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. More headaches this week for Tesla following Musk's surprising go-private plans. The SEC has sent subpoenas to the electric car maker regarding Musk's statements about securing funding, reportedly, signaling that a formal investigation may be underway. This, according to Fox. Here to tell us more, Bloomberg's David Welch and Bloomberg Businessweek's Max Chafkin. Max, we also have new reporting that U.S. national security officials may have to clear this potential deal. What exactly would U.S. security officials have to do with this?
Well, as I said the other day, the issue is that with the Trump administration, where it's not totally clear how CFIUS, which is the government body that regulates this sort of thing, foreign investments in U.S. companies, would treat something like this. Earlier this year, the Trump administration basically stopped the Broadcom-Qualcomm deal on national security grounds. The idea being that if Qualcomm were taken over, it would somehow hurt the U.S., hurt our interest. And you could imagine a similar argument being made with electric vehicles and especially batteries, because Tesla obviously, has a big chunk of the total electric vehicle production, at least definitely in the U.S., and plans to have a huge amount of battery production. So you could imagine that being an issue, and it's just going to be one of many headaches that Tesla and Elon Musk will have to deal with over the coming weeks, months, maybe even years.
Meantime, this report on the SEC sending a subpoena. David, walk us through the continued hurdles that remain to getting a deal done.
Yeah, so Elon has a lot of things he has to get done here. First of all, this issue with the SEC seems to just be getting worse. And if this does mean that they're opening an official investigation, as Max was saying, you have CFIUS, now you've got this. It will take a long time to wind through all of this unless the SEC quickly concludes that he didn't do anything wrong. There are some shareholder lawsuits out there. He was sued when they did the Solar City deal. That is when Tesla acquired Solar City in 2016. That didn't hold things up then, but this is now related to whether or not he had funding lined up and whether or not he manipulated the stock. So these lawsuits are sort of running in parallel with what the SEC is doing. Again, more hurdles for him that could take time. And then look, he's got to get a number of shareholders, in his own words, about 2/3 of them, to agree to exchange their public shares for a private holding, something less liquid and something that is controlled by a man who obviously doesn't like scrutiny and may not be as, well, certainly won't be as transparent once this company is private. So he's got to do that just to get to the point where he can convince the Saudis or others to buy out those who don't want to go along with him. A lot of steps here that are both market-oriented and legal that he's got to get done just to get to the point where he can really push the deal ahead.
Meantime, Max, the board is under even more scrutiny, and looking at some of the board dynamics, Musk has said he will, abstain from these discussions, as will his brother, who's also on the Tesla board. You've also got some Tesla board members who are also on the board of SpaceX. There are reports that the Tesla board is lawyering up. Talk to us about the very complicated board dynamics here.
Yeah, so even in a normal buyout situation, this would be sort of rough, right? Because the CEO has kind of a huge amount of control and influence over the company, and it's hard to have an arm's length transaction. This situation is worse for two reasons. First, because Elon Musk is so central to Tesla's valuation. If he were to resign or be pushed out, you'd imagine that the stock price would probably fall because a lot of people believe that he's crucial to this company's future. The second problem is this board makeup, as you were saying, where a majority of the board members have, very close connections to Elon Musk. So it's hard to imagine how they're going to evaluate this transaction objectively, and you could imagine, further lawsuits from disgruntled shareholders who maybe say that this is, they're not getting the best deal possible. On the other hand, we're not seeing any deals right now. It's not clear that that there's enough funding to make this original deal possible. So we may be getting ahead of ourselves a little bit.
Meantime, David, you have a new story out about the leverage that the Saudi Sovereign Wealth Fund now has as a result of Musk revealing that they would be such a big part of this, at the same time that we're in the middle of an administration that is working to limit the investment of foreign stakeholders in U.S. technology. How does this add an additional really big wrinkle?
So, yeah, this gets very interesting. So the Saudis already, according to Elon, have close to 5% in Tesla. And the Sovereign Wealth Fund would, according to Elon, he strongly hinted in his letter, they would take on a bigger stake to help them take the company private. And he's been talking to them since 2017 about doing that. One analyst estimates that they could end up with a stake as large as Elon's, around 20%. If that happens, sure, he's out of the public markets. He doesn't have he doesn't have a bunch of short sellers sniping at him on social media and analysts asking questions on earnings calls. But what he does have is now a new shareholder sitting on his shoulder that's got a stake potentially as large as his. No, the Saudis aren't like Bill Ackman. They aren't like Carl Icahn in the sense that they're going to tell him how to run the company. But you look at some of the investments they've made, they do often like those companies to make investments or hire people in Saudi Arabia. That's part of what they do, is bring technology, bring knowledge, bring jobs into the kingdom. You could see maybe pressure on Elon to build a gigafactory in Saudi Arabia. That's one thing that an analyst speculated about, but they're going to want something in exchange for helping him with this big project.
All right, lots to continue to follow. David Welch, Max Chafkin for Bloomberg. Thank you both. I know you'll continue reporting on this. Well, since going public in March, Dropbox has had some ups and some downs. The stock price spiked on its IPO and again after its first earnings report earlier this summer, only to dramatically fall after the surprise departure of COO Dennis Woodside despite another quarter of strong earnings. I caught up with Dropbox CEO Drew Houston and talked about what's changed for him since going public.
In some ways, it's kind of back to work or back to business as usual. And part of our path to being public, we have been running the company like a public company for the past couple of years. So if anything, it's been back to recruiting and building.
So you just reported strong earnings. You also announced your COO, Dennis Woodside, who was there for 4 years, is leaving, and investors seem spooked by that. Should they be concerned?
I don't think they should be concerned. I mean, Dennis has been amazing. Like, he's been an incredible partner to me. And when I think back to where we were when he joined the company, we were a fraction of the size, like a few $100 million in revenue, and now we're a global company with 2,000 people, offices around the world. And it's actually because the business is in such great shape that he can pass a torch. And so importantly, he has built an awesome team, and we'll miss Dennis. And I'm sure he'll continue to go on and do amazing things, but I'm also sure that the team we have and that he has built and led will as well.
So what is your plan to get more individuals and more corporations paying for these higher priced subscription plans?
Well, we've been making a lot of progress, and to me, it starts with building a great product. And so, over the last quarter, we announced a bunch of improvements to the core Dropbox experience and to Dropbox Papers, things like paper templates, and a number of improvements to the admin experience for IT admins. So we start there, and then when we think about driving adoption of the higher tier plans, some of the newer features like Smart Sync are only available in the highest tier or highest tier individual subscription or in the business version of Dropbox. So we focus first on engagement, driving making the product as good as possible, and then we do a lot on the back end to drive conversion and build into the product ways to match people with either the paid plan that makes the most sense for them or functionality that they haven't been using yet. So if you're running out of space on your computer, then we can show you Smart Sync, and that's driven a lot of the ARPU expansion or a lot of the growth in revenue per subscriber over the last couple of years.
At the same time, you have these cloud giants like Amazon and Google and Microsoft wanting a bigger and bigger piece of the pie. What is Dropbox going to continue to do to differentiate itself?
Well, for us, competition isn't zero sum, and so we've existed alongside the Office suites and companies like Microsoft and Google pretty much since the beginning. And so what our customers turn to us to do is tie it all together, because with Office suites they keep you within their apps, but when we look at our customers and we look at their phones, they got everything, right? They've got all the Microsoft apps, they've got Dropbox, they've got Google, and no one is helping them pull all that together. And so the fact that we partner with everyone and that we help organize all of your content across the different ecosystems plays to our strengths.
That said, I mean, the cloud landscape is changing dramatically, and I feel like you and I have been talking over the last 8 years or so, and it's always been about the competition. What keeps you up at night, given how fast the landscape is changing? What do you worry about?
Well, so there's a war for talent out there, and that continues. And so making sure that we have the best people, and also just making sure we're placing the right portfolio of bets. And so it's striking the balance between continuing to improve our core product, then also developing new products like Paper, and then planting seeds for future products that will be part of the core business.
What about acquisitions? Do you plan to do any?
We will
in this
continue.
environment?
Yeah, absolutely. Buying companies has been a great way for us to build our company. So whether that's bringing great talent into the company, we've done a couple dozen talent acquisitions. Even new products like Dropbox Paper were seeded by an acquisition called HackPad. And so being a public company makes it easier to do larger acquisitions, and so that's something that we'll certainly continue to look at.
Any areas in particular that you're interested in?
Well, so I mean, we continue anything that helps people work better together, and so we take a pretty wide view of that. And when we look at acquisitions in terms of how do we bring great talent to the company, or how do we accelerate our product roadmap, or how do we accelerate our business.
So when you look at where the growth is going to come from, is it going to come from adding new customers, or is it going to come from somewhere else?
Well, it's really both. So we're focused on driving subscriber growth and then driving revenue per subscriber. And so on the former, we look at our business. We've got hundreds of millions of people who are monetizable users who are registered for Dropbox, and at 11.9 million subs, we still have a lot of headroom among the people who use Dropbox to grow. So we continue to be focused on driving subscriber growth, and we've improved that a lot over the last, those numbers have gone way up over the last couple of years.
Some of my conversation there with Dropbox CEO Drew Houston. Coming up, we've got new information on Uber's financials. We'll break down how quickly the ride-hailing giant is burning through billions. That is next. This is Bloomberg. Now, while Elon Musk is making waves trying to make Tesla private again, there is another tech company where people are highly anticipating the opposite, and that is Uber. Uber has given Bloomberg a look at its latest financials. Second quarter losses are down from $1.1 billion compared to $891 million now. $1.1 billion lost a year ago, $891 million lost now, but revenue growth appears to be slowing. Here to tell us more, Bloomberg Tech's resident Uber watcher, Eric Newcomer. So give us a look at the financial picture.
Yeah, so net revenue now in Q2 was $2.8 billion. That's still growing significantly. It's 63% up year over year compared to the second quarter of 2017. But the key
sequentially down, right?
But it's down if you compare, Q1 to Q1 was 70%. Now we're at 63%. So the amount of growth over previous quarters is falling. And I think to make matters worse, Uber Eats is growing. So Uber's investing a lot in food delivery, sort of a money-losing business, and that's going to mask some of the slowdown in the rides business overall. So not only is revenue growth starting to slow down, but it's sort of being covered up for by the growth of the food delivery business.
How alarmed should we be that the rides business appears to be slowing down?
I mean, I think Uber would argue it's such a big business already, and that sort of most businesses would be super happy with, 63% growth. And some of it's sort of a natural limitation of geography. Uber's already expanded all over the world. But clearly, Dara Khosrowshahi has decided that growth is important to the IPO story. Growth is more important than profits. And so the company is investing in Eats, freight, and still autonomous vehicles to try and find new areas of growth as the rides business slows down.
Meantime, you in the story walk through just how much money this company has burned through in its lifetime.
Right. More than $11 billion.
More than $11 billion
right.
Uber has burned through.
Right.
But it still has $7 billion in its coffers.
Right, exactly. Investors have been very kind to Uber, so it's raised plenty of money, has plenty of sort of cash on hand, but spent sort of a phenomenal amount of money over the years and continues to burn many hundreds of millions of dollars a quarter.
Has Dara given any outlook as to when that investment will slow down?
No, in fact, he's spoken, and at first it seemed like, by an IPO, maybe you need to be profitable. And then I've seen him give remarks where he sort of says, well, not immediately, but you need to be sort of on a path to profitability. So I don't know if I don't think there's been any guarantee from Uber that when it goes public, hopefully second half of next year, that it will in fact be profitable.
All right. Eric Newcomer, who covers Uber for us, as always. Thank you. Coming up next, the Golden State Warriors are teammates on the court, but tech rivals off it. We're going to hear more of that exclusive interview with Andre Iguodala. This is Bloomberg. Amazon has decided to aggressively broaden the programming on Twitch to take on its video rival YouTube in a bid to grab a larger slice of the online advertising pie. Amazon is pursuing exclusive live streaming deals with dozens of popular media companies and personalities. Twitch is offering minimum guarantees of as much as $1 million, as much as a few $1 million a year, as well as a share of future ad sales and subscription revenue. Well, on the court, Iguodala is the Golden State Warriors star and three-time NBA champ. Off it, he's a venture capitalist and tech investor. Teammates Kevin Durant and Steph Curry are also in the VC game, and that can mean some healthy competition. Iguodala talked about his rivalries, relationships, and investment strategies with me on the sidelines of the Bloomberg Players Tech Summit here in San Francisco.
We share information. There's some deals that I passed on that Steph got in, and then I'm seeing KD do some great things in the deals he's in. They've been in a few of the big funds, and I look at it as, African American men getting into a space that we've really haven't had much to do with, or we haven't had much access to. So I looked at it as all of those as positives. The Players Technology Summit is going on right now, and when you look in that room, you see a lot of diversity, you see a lot of African American men, and that's something that you look back on, whether you make 1,000x or you lose your investments. That's something that you look at as a positive, and that's the legacy you want to leave behind.
Andreessen Horowitz just launched a new fund called the Culture Fund, $15 million to back Black celebrities, Black athletes, and all of the proceeds that they get. The goal is to make money, but the proceeds will go to boosting Black nonprofits. What's your take on this fund? Are you part of it?
I am not a part of it, but I have great relationships with a lot of those guys. Chris Lyons is probably, you wouldn't expect me to say his name, but that's a close friend of mine, and he's working hard with that. Obviously, Mark and Ben, close with it. But for me, I know a lot of those people that are within that fund, and it's a great thing. And the Hidden Genius Project is an Oakland-based project where they teach African American young men, how to code, and follow them throughout the rest of their lives with their coding. We have Black Girls Code, a part of the Players Technology Summit last year, and then we have All-Star Code, which is an East Coast-based group in this year, and they're looking to spread and collaborate with the Hidden Genius Project. So whenever you see our community being embraced, and then we take that and we give it back to our kids, that's when you start to see change, and that's when you start to see our culture being able to be equal, and that's equality, is given access and having opportunities that we didn't have previously.
That said, $15 million for a company that has a $1.5 billion under management doesn't seem like that much. There's been chatter that it's not that big of a fund. It could be so much bigger.
Right. But it's awareness as well, because it could be bigger. But the awareness is, that conversation is actually good. It's not enough. So what are we going to do to make it bigger, or do we do it on our own? It comes a point in time where it's up to us to do it on our own, and you see that with LeBron James and the amazing thing he did with the I Promise School, and how that's caused a lot of chatter. Kevin Durant's doing some amazing things with Conway, Ron Conway and Topher Conway, with building some track and field facilities for colleges and schools. And Michael Jordan supposedly didn't give enough of a backing of LeBron, but his Jordan brand gives out scholarships to kids every single year. So just starting a conversation or providing just starts it, and hopefully we'll continue to grow it every year.
So, big season, you're coming off a big season, going into another big season. LeBron's going to the Lakers. How does that change the game and the season you're walking into?
It doesn't change much for us, except for we'll see him a little bit more. I think we'll see him 6 times before the playoffs. But it's good for basketball. We've been able to build a culture and we've been able to showcase our community because we have the best fans in basketball, but no one was able to see that for a very long time. But we're starting to win championships. You see electricity in Oracle, sooner to be over in the Chase Center. So we're excited for the new season. We got a big acquisition, and we want him to come in and feel at home and enjoy the game of basketball, and just keep our fans and the consumers excited about the game of basketball because we do it the right way.
What do you think's been the secret for Golden State to have, so many stars in one place, yet also seemingly trying so hard not to let one star outshine the others?
I think it's about building the right culture, and you see that when you look at startups. If you build the right culture, you'll attract more talent. And
how do you do that?
The top talent can exist with one another, and I think it comes to enjoying the game, treating the game the right way, having fun. We really have good people, because if you don't fit our culture, we won't allow you to come in and kill the culture or kill the vibe that we've been able to establish, and that starts with Steph Curry. Steph Curry is one of the, he's as close to perfect as you'll find in a human being. So we're always happy for him and his success and what he's been able to build for himself and his family. And he's taking that on the court, and we kind of follow in his footsteps.
That was Golden State Warriors player Andre Iguodala speaking to me exclusively on the sidelines of the Bloomberg Players Tech Summit. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. We'll be back tomorrow. This is Bloomberg.
Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
the Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market, averages down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the First Word Asia.
U.S. and Japan duke it out over exchange.
China's slumping onshore bond market is